Hello everybody, it's Thursday again, and that's Numberology Day. You know, last week we did something different where I talked about what the numbers were showing me on my model, and Steve Erdman, my partner, came in and talked about certain strategies. And you know, it was such a success that we're going to do it again this Thursday. So going back a little bit to last week, if you remember, we talked about December coffee, talked about where it needed to close in order to trade or turn the trend higher, and it did indeed do that. Last week, coffee did give us a close we needed. The trend turned higher, and just as a reference point, December coffee needs to close tomorrow at or below 110.20 to turn bearish. And so we can tell by where it is now in the 130 level, 133 level, that we're probably not going to see the 110 tomorrow, which leads us to assume that there's a good chance that the December coffee will remain in an uptrend at least for another week. You may want to go to www.ifgfutures.com and take a look at last week's tape and see what strategies Steve presented and what you may want to do or still may want to do to take advantage of this, or possibly, let me say, take advantage of the uptrend in coffee. This week we want to talk about November beans. Now, if tomorrow November beans close at or below 904 and a quarter, the trend in November beans, according to my model, will indeed turn bearish. Looking out front, should they indeed close above 904 and a quarter tomorrow, what are we looking at? What values are we looking at in the coming next 2 weeks? And next week, or a week from tomorrow, it needs to close at or above 939 and three quarters to remain in a bullish attitude. A close below that will turn the trend. And a week after that, or 2 weeks from tomorrow, it needs to close at or above 986. So we can tell that it's going to become increasingly more difficult for November beans to remain in an uptrend. And given that they're trading below the $9 level today, there's a very good chance we could see the trend turn negative tomorrow. That's not a certainty, but as we can tell by the coming prices, the likelihood of November beans turning bearish in the next 3 weeks, starting with tomorrow, is quite possible. So what is the likelihood, and what strategies might you employ in the coming weeks or starting next week if we do get a reversal in the soybeans tomorrow? And for that, we're going to go again to my partner Steve Erdman, who will give us some strategies that we may want to use as we face the likelihood of a turn of the November beans. Remember, trading futures is always risky, and you should know what underlying risk you're assuming when you trade any commodities, options on commodities, or spreads. And again, go to www.ifgfutures.com to learn more about our strategies and more about us. So here, with no further delay, is my good friend and partner, Steve Erdman.
Hi, this is Steve Erdman with Chart Chatter on Thursday, August 20th. We're talking about the no bean market today. I think you saw Lee talking about no beans and how the long-term trend would turn lower if we have a close tomorrow afternoon at 904 and a quarter or lower. So what we'd like to do is show you a couple of strategies and also give you a chart look to see how we'd approach the market this time. We'll go to the chart and look at what I've shown you here is a weekly soybean chart, and this goes back to 2006. The obelisk on the left shows the spot contract back in late 2008 and 2009, and how the price action traded basically between 775 and 1050. Well, it's I think the expectation now, as Lee told you, unless we get some very strong markets, it's going to be very difficult for the November bean contract to sustain its uptrend into these next couple of weeks. So right now we'd suggest looking at any rallies in Nova beans back to potentially even 950 to 975 as detailed on this chart to be buying puts. And we'd also suggest that you take a look now at put values that are around 7 cents per contract. And when we went to press, the 830 November bean put was trading at 7.5 cents, and that's about $375 a contract before commissions and fees. So to recap, sell rallies, Don't be surprised if the market comes back to the midpoint as detailed on this chart, which comes in around 975. But we do believe that the market at some point has the potential to trade down to that support zone that's detailed on the chart from 840 down to 790. So good luck, and as always, try to call us with any questions you might have, or feel free to email us. My email address is steve@efggrp.com. Thanks a lot.